Hello everyone, welcome to the Ichimoku daily analysis for the SP 500 for Thursday, January the 7th, 2010. Well, another green bodied candle today, and we've had 4 days of green bodied candles, which means that on each of those days the buyers have made net bullish progress. That is fairly significant for this market. It seems that this is a market that doesn't want to come off. Having said that, though, a few of those days the buyers did make very little net bullish progress. The interesting thing about today's candle is that the amount of progress that the buyers have made is larger than the 2 previous days. So there is a bit more bullishness coming back into this market. We still have a first time frame uptrend intact, even though today we had in bar chart terms, an outside day, which is a day with a higher high but a lower low. That in itself raises some doubt about the viability of the first time frame uptrend, and that's basically because the bears were strong enough to take out the previous low. Having said that, though, looking at the dynamics of this candle, we can see that we have a long shadow on the bottom of this candle, and that represents buying coming in. And once again, as the market tried to trade down through this 1133 region, which was a previous area of resistance, the buyers came in, and it seems that that area now is holding as an area of support. As we've seen, the body of the candle is green, so that means that the buyers have made some solid net bullish progress, and the market opened at the mid-range level and closed at the high, which is telling us that the bulls closed in control of this market. At the close, they seem to be fairly strongly committed, and certainly the bears lost any commitment that they had throughout the day. So the short-term dynamics are reading fairly well for this market at the moment. If we pan out, if this uptrend does continue, we can see that we have potential resistance up around the 1163 region. So there is potential for this market to increase 30 points. Now, it's unlikely that it will do all of that in one go. There is likely to be some pullbacks along the way, but that does set a decent target for us with this market. Now, the market is trading substantially above the cloud or the Kumo, and that tells us that the market has an overall longer-term positive bias, and the market is trading up above the Kijun-sen and the Tenkan-sen, which means that the market is bullish in the medium and short-term time frames. Interestingly, both of these indicators are pointing up fairly sharply, and that reflects the strong upside momentum that this market has. Having said that, though, quite often when the market becomes a little overextended, these indicators can turn flat and the market action can be attracted back towards them. There isn't any indication of that happening yet, but we do need to be aware that that can happen. Just looking at how far the price action is away from the Kijun-sen, it is starting to look a little bit overextended. So certainly we need to just be aware of that, depending on the time frame that you're trading in. If you're trading in the short-term time frame, then that's probably much more important for you than if you're trading in the medium-term time frame. So there is potential support for the market at the Tenkan-sen, which is at 1128, and then at the Kijun-sen if the market does continue trading down at 1114, but also the top of the previous resistance of the rectangle pattern that we identified, roughly about 1120. So the market is looking quite bullish. We should be looking to the low around this 1133 to 1130 region as potential support. If that's taken down, then look for the market to potentially retrace to some of these support areas. But that's probably unlikely to happen before the end of this week.